BlackRock wants Bitcoin to go up to $1 million. They have the firepower to help that happen as well. Like, they definitely can push Bitcoin's price very high if they want. I want to explain why that is, but more importantly, why they have such a vested interest in Bitcoin, why it's different than other assets that they buy, and why they have the financial incentive to push it up to levels that we cannot even imagine. If you don't mind, hit subscribe. Turn on the bell notification underneath the video so you can see future videos like this. Like, if you've already watched these videos, I'm going to keep on making them. If you like them, if you find them informative, if they change how you think about Bitcoin, hit that subscribe button. We're on the road to 300,000 subscribers, which is a big level to hit. I really appreciate your help getting there too. There's also a link down there to Margex where you can trade cryptocurrency using leverage. I mean, this has been one of the best ways to amplify returns this bull run. And they're doing an airdrop right now where you can get some free tokens just by hitting the join now button. So you might as well do that if you consider trading a good way of playing the short term, especially with a lot of catalysts coming up. Would not be surprised to see some pretty decent pumps. There's also a link to CoinW as well underneath the video. They're also doing an airdrop. WEEX is also doing an airdrop underneath the video. There are a ton of trading pairs there too. And there's a link to HGAalgo that pretty much nailed the bottom. It's an algorithm that we created that can tell you when it might be a good time to dollar cost average into the market. So definitely check that out along with the links to Bitcoin Nashville. They are raising the prices consistently, so if you want a 10% off code, there's a link to that underneath the video. Now, let's start here. We talk about BlackRock and Fidelity so much because they continue to buy. They're pretty much the biggest buyers that I can find out there of these Bitcoin, or of Bitcoin. Now, I'll be clear, they're not necessarily buying it. Sometimes they do buy it. I'll explain why that is, but a lot of the time it's their clients buying it, it's hedge funds buying it, it's people in their brokerage accounts. Like on Fidelity, you can go and buy IBIT. So like there are all different kinds of people that are buying these Bitcoin ETFs. So it's not necessarily Fidelity and BlackRock buying the ETFs. Now, on the other hand, sometimes these companies do buy the ETFs. They do that through other portfolios. We've seen BlackRock use like their global strategic fund or global allocation fund. They have a couple different funds. I think it's 4 now that have bought their own Bitcoin ETF. Okay, so sometimes BlackRock literally buys their own ETF. And I've seen some people coming out and saying, well, especially at the beginning, people were saying, well, BlackRock doesn't really care about Bitcoin. They could just drive it down. They have incentive to drive down the price and they could short it the whole time. Keep in mind, there are way more incentives like that. That's very conspiratorial and I don't think really makes a lot of sense because the upside is uncapped. Like the amount of money that they can make from these ETFs is actually insane. Like people don't understand it. Let's just take a look at this. So BlackRock has about $22 billion in their IBIT fund. Like their fund is worth $22 billion. What are the fees on that? 22 billion. I mean, try to type out 22 billion without messing up a zero. 22 billion times 0.0025 because they have a quarter percent fee. That is $55 million a year that they're making. And this is something that they spun up in about 7 months. Okay, $55 million. And that's pretty much pure cash flow, right? That's pure profit. I mean, there are some fees, right? They're advertising a little bit, but they could stop advertising and the fees, the cost of managing this fund would be extremely low. Let's call it 10%. So they're making $50 million. Okay, that's impressive for a new fund. And the thing is, a lot of people don't understand they can make a lot more money from this whenever they want. And they have financial incentive to keep this going. Let's explain why. Okay, let's say Bitcoin goes up to $100,000. Okay, so it goes up to $100,000 and it's let's call it $66,000 now. This would mean that they would increase their fees pretty significantly. Their fund is actually going to grow by about 50%, even without any more Bitcoin, without any more inflows or outflows. If it just goes stagnant, their fund will be worth 50% more, just about 50% more. That means their fees go up by 50% because they're charging US dollar fees, right? So their fees would go up to 83.3 million. Okay, so they have a financial incentive that's very obvious for the price to go up. But that's like the first layer. That's the first layer of benefit. And people don't really dive into the deeper layers. Okay, let's take a look at this. Let's look at two funds that are not the IBIT ETFs. Let's say that they're like the global allocation funds. They're mixed up between treasuries and bonds. They're very safe for people that have lots of money, kind of like a hedge. One is without Bitcoin. Let's say it has $1 billion in it, okay? The fee is 0.8%. Now, these numbers are, this is a round number, but this number is very similar to some of the funds that they've added Bitcoin to, some of their other funds that are like diversified across these different assets. This fee is very similar to, or exactly what those other funds are. So on $1 billion, they would make $8 million, okay? $8 million a year in fees. Now let's take one with Bitcoin. So you have the same stuff, but you have Bitcoin. Let's say it's the same fee. So you would make $8 million again. But let's say it's 10% Bitcoin. Okay, so $100 million of it is Bitcoin. Well, they can invest that in their own fund, and that grows the Bitcoin fund. So they actually get a fee in that Bitcoin fund, right? So on this amount of money, it'd be about $250,000. Okay, I mean, that's not life-changing money for Blackrock, but it does grow their Bitcoin fund, makes it so that when people go search for different Bitcoin funds, they look at Fidelity, Blackrock. Well, it makes this one a little bit larger, so people think it's a little bit safer. Okay, but keep in mind, this also can push the AUM on their Bitcoin fund higher, but it can also provide higher returns for the overall fund. I mean, look at these assets, bonds and treasuries. Maybe these go up 4 or 5% a year, maybe 3%. But you add Bitcoin in there that has typically pretty high volatility, pretty good returns. Okay, let's say Bitcoin 3x's. I know it's crazy, but I did this math when Bitcoin was also like 40, 50,000. So it would put Bitcoin around 120 or 150,000. It's still possible that Bitcoin 3x's. Maybe it's over the next year, maybe it's over 5 years. Let's just roll with me here. Let's say Bitcoin 5x's, the rest of the fund does nothing. It does nothing. The new AUM of this fund is 1.2 billion because that 10% turned into a larger percentage. That 100 million turned into 300 million. So the new fees are much higher because you get the fees on the overall fund that's diversified. So 0.8%, which is a much higher fee structure. Like the BlackRock Bitcoin ETF could have a low fee, which is what it is now, it's 0.25%. But if it's within this larger portfolio, you get charged this fee. So now you get a much higher amount of fees because your fund is much larger. It's 20% larger. So instead of 8 million, now you get 9.6 million. And then you also get a higher percentage on the Bitcoin fee. So instead of $250,000, you get $750,000. So the new total fees are over 10 million. So that's one of the very interesting things to BlackRock and Fidelity. They can put the Bitcoin ETF within other diversified portfolios. And most likely they'll do that more and more. The other thing is they can kind of they can literally control that money. So they have a lot of control over when they want to buy, when they want to push Bitcoin up. They already have that control because they have, maybe a couple $1 trillion of money in these active portfolios that they can allocate how they want. Now for example, BlackRock has about $10 trillion overall in AUM. So they have a lot of control even within the portfolios that they allocate towards. The other thing that people don't consider, BlackRock can increase their fee structure. Like right now, it's actually really funny on their website for this IBIT ETF, right? They say BlackRock will waive a portion of the sponsor's fees for the first 12 months, commencing on the first day of trading. So the fee will be 0.12%. Basically, they took off half the fee for the first $5 billion of the trust assets. Well, they're at $22 billion. So like that didn't last very long. Now the fee's 0.25% on everything over that $5 billion. But keep in mind, they can increase the fees. A lot of people don't think about that. But like, I mean, Netflix, Disney Plus, Prime Video, like these streamers increase fees all the time, and it just hits their bottom line. ETFs can raise fees. It doesn't happen all that often from what I can see, but that is a very profitable growth driver. I mean, let's think about this way. If they raise the fee from 0.25% to 0.3%, no one's going to scoff at that. And I mean, it might be a little bit annoying, but no one's going to withdraw over 20th of a percent of a fee. Like, people won't do that, especially if they're in the gain, if they've made a lot of money. If it's in a brokerage account that's not tax exempt or tax benefited, they would have fees for selling or taxable. They would have a taxable event in a lot of regions. Now, maybe it's in a Roth or a 401k or something that's tax shielded, and then you're like, okay, screw it, I'm just going to go over to Fidelity. Maybe that's something that's possible, but they can raise that fee, and that little increase that most people probably wouldn't even notice, that can make them 20% more to their bottom line. So right now they're getting what, 55 million? We said they could make 65 million, just like that, if they wanted to. I don't think they will necessarily, but that is a nice little lever that they can pull. I mean, they can do that with a lot of their ETFs, but that is a nice lever that they can pull just to literally become more profitable whenever they want, really. Of course, there might be a little bit of backlash, like I said. The other thing is, like, on a deeper level, it just looks good to be the pioneer of an asset that does really well. Like, Larry Fink came out and was very pro-Bitcoin before a lot of other institutions were, a lot of the big institutions. I mean, Vanguard still doesn't even allow Bitcoin to be bought or the Bitcoin ETFs to be bought. But it looks really good if you say, yeah, I fully believe in this, and then it goes in 3Xs in a year or two. To be clear, they started this ETF when Bitcoin was around 40K. So if it hits 100, that's a 2.5x, which is a really good return. So it looks really good at a deeper level. If you get your clients to buy, like your wealthy advisor or your wealthy clients, which they had a private fund, like they got people to invest in Bitcoin before the IBIT trust. So they were getting people to buy at 20,000, 30,000, 40,000. It looks really good. Like if you run someone's money and you are able to get them a really good return and you got them in before other people, they're probably going to feel pretty good about giving you money in the future. They're probably going to give you, a little bit of cred. They're going to believe heavily in you that you can make them money in the future. So they'll come back with more money. And when you need something, they'll probably help you out. I mean, we've already seen Larry Fink, maybe some of that's happened in the past. We don't know exactly who was in that private fund, but we've already seen Larry Fink change some minds out there, from possibly Donald Trump to CNBC anchors to maybe even Jamie Dimon recently, or maybe that's Trump changing Jamie Dimon's mind on Bitcoin. But like, he's changed a lot of people's minds because they have a lot of social capital. They have a lot of financial capital too. So money will follow him. Money will follow money. So it's just something interesting to think about. And if you think that this is going to be a massive potential for the next 10 years, if you think that maybe this has a chance at becoming the new global currency, I think it makes sense to control some of that asset. It might be another reason that they want this to do well. Let me know your thoughts, though, underneath the video. Let me know what you think is going to happen from here on out. Thank you so much for watching. Check out the links to Margex and to CoinW underneath the video, along with the tickets and algo and all that. I really appreciate you guys. I'll see you all in the next one. Bye.